Good afternoon, ladies and gentlemen. Thank you very much for having me here. And I would like to congratulate the ECMA for a good job. I've had a lot today. And from all I've had, from investors' protection to regulatory compliance and also ensuring that the market maintains integrity, there is a link that is missing between the investor, the investment, and the regulator, who actually ensures that the good job is maintained and then there's continuity. This actually brings up the subject I would like to actually discuss just in a few minutes. Safeguarding assets, the custodian's role in market integrity, that is enhancing trust and transparency in financial market. Most of the African market are actually operated within the context of pre-custodian era and the current era, and we have few examples from the panelists that actually have shared their experience with us. A typical example is the Nigerian market, the Ghanaian market, the Kenyan market, and also now the Ethiopian market laying a very good foundation. I won't go through the slides because of our time, but if you need information on each of the things I've mentioned, they are well laid out there. The pre-custodian era, what actually happened in the market. Most market depended on physical certificates. They depended on information that are manual. And this exposed the market to error and fraud, and even in most cases, losses. But post the custodian era, there are three key players within the custodian space. We have the asset custodian, we have the central security depository, and also the registrars. And each of these has their clear roles. And where these roles are nowhere and clearly demarcated, there could be inefficiency, and then the market integrity may not actually be ensured, and investors' trust will not be there. Take, for example, in the Nigerian market, until when this was done, we were not actually exposed to cross-border investment. Foreign investors were not actually interested in the market because there were exposure to risk, exposure to losses, and investments are not safeguarded. So these three has each of their roles, and they are actually listed there. The custodian, in summary, actually safeguard or hold the assets of the investor. Their target job is to actually ensure that the investor's trust is maintained. And these are done through holding of assets securely, settlement of trade on behalf of clients, manage corporate actions, facilitate cross-border investment and regulatory compliance. While the central security depository ensures that they maintain electronic form of assets and then operate the settlement system for the market, and also enable dematerialization and transfer of ownership, also provide market level reconciliation and reporting. While the registrars actually protect the owners, that is the issuers. They ensure that they maintain the register of the shareholders, and then all corporate actions are well documented and distributed. And also They keep good records and then also maintain regulatory compliance. So for these three, the key distinction is that the CSD maintains market level ownership record. The registrar maintains issuer level ownership record, while the custodian maintains investor level asset protection and service. Now, let me just quickly move to, I've mentioned three markets in Nigeria, in Africa, that have actually deployed the activities of custodian. Today, we could have information about the pension asset in Nigeria. It's about 23.3 million. And just because there is the activity of the custodian who maintains clear records and ensure that investors' assets are protected. And also for the Ghanaian market, it has grew by 39.5 year on year, and as at the end of 2024, they had about 86.23 CDs. And while the Kenya market has asset under custody that rose from 76.3 billion to 496.2 billion between 2020 and 2025. So let me just quickly mention the role of the custodian. The custodian as a growth enabler across Africa. One, they are backbone of Africa's capital market. The custodian now anchor investor protection and settlement reliability across more than 25 African markets. Their presence has boosted institutional participation and enabled safer and scalable capital flows, while in the other vein, also they are driver of digital and cross-border investment. Those countries that I mentioned, it was as a result of the activities of the custodian that they attracted foreign investment, then leading to capital flow. And so also they are catalysts for long-term capital mobilization. So what are those things that are key to the activity of the custodian? Number one, technology standards, operational controls, and also risk management. Very, very key. And all this had made their job to be effective. Then also for the Ethiopian market to actually have such kind of growth that those examples have actually done. Number one, you need to build a strong foundation. Number two, enable new products and services. Number three, interoperability across market players. Those things listed are the activities that needed to actually be embarked on. So what will this unlock? A custody ecosystem is capable of attracting institutional investors, supporting product innovation, and enabling Ethiopia's capital market to scale sustainably. So my closing perspective is that custodians are no longer just safekeepers. They are strategic enablers of Africa's next phase of capital growth. Their ability to strengthen trust, integrate markets, and support long-term capital formation positions them at the center of Africa's financial transformation. Thank you.